What's going on, everyone? It is March 16th, 9:13 a.m., reporting to you live again from the bunker today. It is Monday morning, and we're ready to get started for a fresh week here. I'm just going to post another video here leading into this week because, as we saw last week, was the worst week in the market since 1987. We're continuing to drive forward here. More numbers of the coronavirus are becoming known in the US, and the markets are continuing to tumble downwards. So my goal with these recordings over this short period are to just provide you up-to-date, real information on the financial markets from a different perspective of what you might be seeing in mainstream news. All right, so this morning, I'm going to answer one question that we had in the last call, which was from my friend Tom. Tom, how you doing, man? Miss you, bro. Tom was just wondering who I use for information, or is there anyone I follow to get all my information on the markets and also stock trading? I would like to point out three of my sources this morning, the first of which being the Kaiser Report. And shout out to Kaiser Report. If anyone wants to actually watch real financial news, I really highly suggest that you watch the Kaiser Report. You can find them on YouTube and also RT. The reason why they have to host through RT is because they get censored through all U.S. News networks. Even YouTube now has started to demonetize and push them down in the rankings. But Max and Stacy are both activist journalists. The Kaiser Report has been running for 10 plus years now. They give you pretty raw and real news on the markets. And I believe I saw a stat that the Kaiser Report has made their viewers made more millionaires out of their viewers than any other financial news network. So that's pretty primarily where I get most of my news. Financial news is from the Kaiser Report, watching them on a weekly basis. The second would be Ray Dalio. Even though Ray Dalio is a billionaire and he is of the top 0.1% of the elites in this world, there's a reason why he has so much money, because he knows what's going on and how to invest properly. So Ray Dalio is the head of Bridgewater Associates, which is the largest hedge fund in the world out of Madison, Connecticut. So right here, smack dab in Connecticut. He's actually been whistleblowing for a few years now, talking about wealth inequality and the wealth gap. He has a book called The Big Debt Crisis, which you can download for free via PDF on his website. I think you can actually just Google Big Debt Crisis, and then you'll see the link to Ray Dalio's website, which you can download it on. They say you only have to read the first 50 pages to really understand what's going on right now with history, with the trends historically. I really do recommend that. It really does explain where we are right now in society, where the actual credit markets are, and also, where we're going forward in history now. Bridgewater also has a really good video on YouTube called The Economic Machine. I really recommend everyone watches that because it's a 30-minute animated cartoon, really, where they really explain how the actual economic machine works in the economy here in the United States and around the world. So that one I would recommend just watching in general, just to kind of freshen up on your economic skills. But we all know that no one has any economic knowledge, right? Because we don't teach this in school, but that's why we're tuning in today, so I can talk and also we can collaborate on all these different topics. The last one would be Real Vision. So Real Vision is a financial news network that has started the last 2 years. And these are guys that are typically macro investors. So they look at what's going on a larger scale around the world. And I think that they started to see that the markets were starting to actually move in this downward pattern. So they started Real Vision, realvision.com. You can go there and subscribe, I believe, for $1. And I'm not affiliated with any of these sites. Yeah, Tom, so that's my feedback on where I get information. Again, the Kaiser Report's where that's my financial news network show. You can find them on YouTube. Ray Dalio from Bridgewater, I follow him mostly for the history and then a lot of his macroeconomic perspectives. You can download the book, A Big Debt Crisis, on his website, and then also Real Vision. All right, cool. So it's 9:18 Monday, March 16th, 2020. And just giving a quick update here. So last week we ended the week where President Trump had a press conference at 3:30 on Friday, right before the markets close, pretty much issuing a national emergency for the United States. Typically, these announcements come out on Fridays because the markets aren't open on weekends. So if you give a press conference on a Friday afternoon, 30 minutes before the markets close, the markets have no ability to react to that news and information right away. So that's kind of why you saw that strategically done on a Friday afternoon. So along with that announcement, the Fed also announced that they're dropping interest rates to zero for the first time in U.S. history. So the United States now is approaching negative interest rate territory. I've talked about negative interest rates quite a lot over the last few months. I can point you towards any of the recordings. If you go back to the Nonconformist, which I left the link to where you can subscribe, my partner and I have been talking about negative interest rates since last September. So we're now inching closer to that in the U.S. And along with the Fed announcing a drop to 0% for the interest rate was the start of quantitative easing again. So we'll get into more what that actually means today during this talk. But right now, pre-markets, Dow is down negative 4.53% or 1,000 points. And I think the S&P and everyone else is pretty much following them. Gold and silver tracking a little bit down this morning, which is expected if the markets continue to sell off. All right, cool. So let's just get into it then. So let's start with the Fed's announcement on Friday. So dropping the interest rates to zero. What does that mean? Well, the Federal Reserve Bank has what's called a federal funds rate. It's an interest rate that they set that pretty much runs the economy. Our economy works off of a credit-based system. That's really what we have, is a credit-based economy. So the Fed's interest rate sets the rest of the interest rates in the U.S. So everything from banks borrowing to each other, to us taking out mortgages, to auto loans, all those interest rates are really set off of the federal funds rate. And now that the Fed funds rate is at zero, that means that these banks will be able to borrow money at 0% interest. So this is really the issue. This was the problem that got us to where we are now from 2007, is that during the last housing crisis, the system really, when I say the system should have collapsed, what I mean by that is that after 2007 and 2008, the reaction from the Fed was to bring rates at zero. And that allowed banks to actually have access to free money. And then with that free money, they mismanaged it. And then it only stuck within the top 1% of banking elites and corporate heads. And it didn't trickle down, right? So we're back there now. So, I would expect you'd see mortgage rates come down now. You'd probably see auto loan rates come down now. Banks will have the ability to borrow money at 0% interest rates, and so will a lot of businesses. So that's that. But remember, once we actually go into negative interest rates, that's where this whole credit-based system really flips upside down, because that's when the environment changes. So with a negative interest rate, I talked about with mortgages, when you take out a mortgage loan with a negative rate, what that really means is that the banks will actually pay you every month for that mortgage. And on top of it, it also confiscates wealth of people that have savings accounts, because you're now obligated to pay the bank an annual fee on your savings. So what it does is it flips how interest rates work now. The way interest rates work now is, I put my money in Bank of America, and even though, you notice you only get that 0.002% interest on that money, but you still get a little bit of interest on that money that you have at Bank of America. And then with loans, if you take out a loan from Bank of America, you have to pay them back interest in the future, because that's the way the bank manages the risk of that loan. That's also how the bank makes money that's how banks make money in general, is through loans, through issuing loans. But when we go negative, the loans are, the loans are now, again, you take out a loan and the bank pays you each month for that loan. And then if you're actually saving money with the bank, then the bank's actually wealth confiscation. They're taking your money in fees. So that's what this whole 0% interest rate means. And it's an important barrier to watch because this is really history in the making. Once we cross negative, we'll be with the rest of the world, and it'll be even more of an unknown new territory. So we'll just have to watch through this week now what that means. Typically when we've gotten those announcements from the Fed in the past, the markets will actually rebound and they'll do well. In this case, we're seeing it to continue to slide. So that's something to watch out for. I expect it to continue to actually slide there. All right. So the next thing I actually wanted to get out there too was, the actual currency and what our dollars actually are, because this is really what this whole chaos is coming down to right now. I've had a belief, and if you actually go to Ray Dalio's website and you download that book, A Big Debt Crisis, what they try to discuss through that is the reserve currency and the currency of nations, and how over time in history, the currency actually goes through a transition where it's no longer considered a reserve currency of the world anymore, and the world switches to a new actual source of exchange, means of exchange. That's actually kind of what I think is going on right now. So what is the dollar? How does the dollar work? Well, our dollars and our currency used to be backed by hard money. It used to be backed by gold up until Nixon took us off the gold standard in the early 70s. That's important because that was really the reason why the dollar was able to become a reserve currency of the world, is because after World War II in the 40s, the world knew that as long as they brought back dollars to a bank, they could get its weight or its worth in gold back, right? So it was backed by gold. But when Nixon took us off in the 70s, what that did is it created a free floating currency. So, that's where inflation really mattered, because after the 70s, if the government created a lot more of its currency, then it devalued the currency as it is. That's why you hear now, like we joke that our grandparents' pensions, back when they were growing up, they were able to afford, everything, an automobile, a house. It's because the actual currency was worth more back then because they hadn't been able to create a lot of it yet. Well, we're now fast forward to 2020. What's going on with the Fed announcing quantitative easing again is that they're beginning to add more of the money supply, more money into the overall circulating supply. They're able to do this because it's not backed by gold anymore. It's not backed by a hard asset anymore. The Fed literally clicks a button and then all of a sudden there's $1 trillion more dollars in existence. But the issue is that it devalues the rest of our money and it steals from our future selves. That's why you've heard a lot of the founding fathers were against central banking and inflation. This is exactly why. And this is what's going on right now this week again, is that the Fed announcing that they're starting quantitative easing. All quantitative easing means, that's a fancy little economic term that's been created. All it means is that it's more money being added to the actual overall circulating supply of the overall money supply of a nation. So quantitative easing, when you hear that, all you have to think of is money printing. That's really all that means. So that's what's beginning again this week. We know the Fed is going to start QE again, which means that they're going to be pumping money, creating money out of thin air to add it into the actual economy, devaluing all of the money that we hold now. So that money that you look at in your bank account, the money that you look at in your wallet, that's worth less right now because more currencies being added to the overall supply. Do they need to do this? Well, yeah. Now they're trying. They got us into a mess here, so that's why they're actually doing this, because banks need more dollars right now. Businesses need more dollars because they've taken out so many loans and they have so much debt that they can't even pay off the interest on that debt. So they need more cash. They need to borrow more. So that's what we're seeing happen now. It's significant because it's an experiment. We don't know if this is going to kickstart the economy again. And typically when the Fed jumps in and lowers the interest rate and then pumps up the money supply, the markets do rebound and they do recover. But now we're starting to see, after last week's announcements coming into this week's market, that the markets aren't bouncing back. Actually, they're continuing to go down. And a lot of that is because we're dealing with a larger currency crisis right now. This isn't just a recession. This is different from the past because of the credit issue, the corporate debt issue, and we now have an actual currency crisis where we're going to see inflation as well. So, we have the risk of the markets not doing good, and then we have a risk at the same time of the currency devaluing through inflation. We've seen this in Venezuela, Argentina, Turkey. This has been going on to a lot of countries around the world, and it looks like it's finally at the doorsteps of us here in the United States. So that's what the dollar is. And that's why it's important to watch what's going on with inflation now. I've even been seeing that some Japanese banks now have withdrawn from the dollar. I've talked about in the Nonconformist with Mike quite a bit now. We've been following China and Russia and a lot of central banks around the world purchasing large amounts of gold. It's another reason why I've been, a lot of my focus in the last 2 years has been understanding currencies and understanding the metals and how the metals move. And it's no coincidence that Russia and China's central banks have been buying the largest amounts of gold ever historically. And I saw some data that came out a few months back where China and Russia, they weren't worried about a currency collapse because they had acquired so much gold that their credit ratings are still fine. They're good, because even if the currency collapses, all that debt they have, if that starts to increase, they have enough gold in reserve to pay that off, because gold is hard money. Gold is always been sound money. It hasn't been this paper garbage fiat dollars that can just be created out of thin air. It's a mirage. It's sound money. Gold is important because when it comes back to it, it's scarce, right? So, this is also something else some people don't realize with the metals is, at least with gold, there's only so much of it that exists on Earth. You have to mine it out of the ground. So that's, so there's only so much that exists. It has to be mined out of the ground. A nation can't spend as much gold that it actually has, because then it wouldn't have any money. So this is where a lot of people think we're coming back to now. So we'll have to watch out. We'll see what happens going forward. I'm under the impression and the belief that, when the dollar continues to inflate and people decide to spend other currencies other than dollars, we're seeing that right now with the oil wars, is that Russia and Saudi Arabia and Iran and China are kind of playing this little chess game in that region of the world. And they're getting to the point now where they're saying, you know what, we're not going to spend the U.S. We're not going to buy oil anymore in the dollar. And a little background on oil. All oil in the world is traded and settled in the U.S. dollar. It's called the petrodollar. But they're getting to that point where they're saying, you know what, we don't want to use the dollar anymore because we don't know what its future is, and we don't really trust its value anymore. And we'll have to watch and see if they actually do decide to trade in other currencies. I think that's when you're going to start to see potentially a hot war pop off with oil, is that, when nations decide that they're going to trade oil in something other than the dollar, that's when you got to really watch what happens, because then we start to see the fight over who controls oil overall, what nation controls that supply of like an important natural resource. Yeah, so that's where we're going. So watch it again. We'll see what happens this week. Today it's still very early, but we know the Dow is already down 5%. The U.S. announced national emergency, so I'm expecting more turmoil today. In the Bitcoin markets, Bitcoin has really shown it. So I still support it, and I still have preached to you guys, download the Cash App, buy a couple dollars at a time. Right now is an extremely volatile period for crypto. Although it's not really anything new with Bitcoin. That's why the joke with everyone that has with Bitcoin is that it could be up 5,000, it could be down 5,000. But this is why Bitcoin was created, though, for this exact scenario. That's what I try to preach to young people too, is that, especially people my age, we don't really have, we don't have trust in what's going on right now with the financial system, right? We're still young. What do our retirement accounts look like? What do our pensions look like? Is it going to be there? Well, maybe not, right? But as long as you can invest in something that's new, alternative, and scarce like Bitcoin, then we actually have some hope going forward. So, these prices are still extremely cheap. This is why Bitcoin was created. Remember, it's just like gold. It's only has so much of it that can ever be in existence. and it's digital scarcity. It's scarcity alone is why it's going to prove itself during this period, because as the dollar is being inflated away, because more can be created, you can never create more Bitcoin. You can never create more gold. And that's why during this period now, in the next year or coming years, it's going to be even more important for people like us, because as our savings accounts are inflated away by the central bank continuing to print more money, and our, you're going to watch literally in your savings account, the money's going to be worth less and your savings is going to be worth less. I think that people are going to start switching into actual stores of value like gold or Bitcoin. So, continue to watch that going forward, guys, and gals. That's really it. Other than that, I'll be here still working, still living, still loving. That's the most important thing to remember during all of this, is that, it's community. Unfortunately, during times of crisis, that's the times that we see people come back together and unite. We saw that after September 11th. And I think we forget that a lot during, after the fact. These people don't really help each other anymore. But just look out for your people, like your neighbors and your friends and your family to your left and right. Just love each other during this time period. Continue to stay tuned. Follow a bunch of different news networks, right? You can't really just follow one. And that's really it. Try to walk outside if you can. It's beautiful. It's been beautiful the last couple of days, and I think that's a blessing for us. So that's really it. Until next time, guys, I'll talk to you soon.